Oh, good morning, folks. Hey, it's Shooter. Welcome to Weekend Box Scores, Swing Trade Notes edition. Of course, at the end of the presentation, please review our disclosure. Let's jump right into this. I went risk off mainly because we had so many names extending in their count. In other words, I'm seeing much more downside. So let's try and get into that a little bit. Okay, the dollar really indescriptive for me this week. We're still around this flat. I think we're just going to bounce around here for a little while. Now, obviously, we get up and out of there, that might change a little bit, but realize even in that zone, that 106.41 is weighing on indices. So I would suspect that that continues this week. Now, TLT, we're putting in this base for our wave three. Now, I'm expecting a little bit of a bounce this week to about 86. If we don't get that, it's probably going to bleed a little bit further on three before it puts in our four. So it's looking at a primary wave three, right around 83.35, which is a little bit above from where our minor wave three came in at, which is quite common when you're finding a little bit of a bottom. So then we should grind back towards maybe about 90 on our wave four, but still realize the slope on this puts us out towards December, really between now and when that wave four manifests. And that's how TLT looks at the moment. Now, earnings, big week. Apple, I think, is the big play this week. Is it going to hold us up or is it going to bring us down? That really is what it comes down to. Now, this week, two of our shorts, Airbnb and Qualcomm, both have earnings Wednesday after the close. Of course, that complicates the trade, but I still think they guide lower. That's my thought. A hedge might be prudent. I think it's either 110 or 120s calls. If you're going to hedge, 20% of what your position is on the shorts, but do the weeklies instead of the Decembers like I'm in with Qualcomm and Airbnb. So now, this morning we should hear shortly about McDonald's, which I think is, it's always been a staple for me getting the feel for the market. And then we also get HSBC this morning. I'm also interested in what the oil patch is doing. Transocean we have on Monday after the close or today after the close, and then BP we have Tuesday morning. So that's something I'm interested in, as well as CAT, because it gives me an eternal. Now, both Pfizer reports Tuesday before the close and Moderna reports Thursday before the close. And I think both of them, we're going to see the lower COVID vaccinations that are reflected in their numbers, because that's been going on a number of months now, or a number of weeks anyways. And, then we're set for Apple. And I think, like it's really dictated our tone for months when it comes down to earnings. I think that will repeat itself again. All right, so let's jump into our swing trade longs. GLD, we're still looking for 202. I've actually got the count up around 245. I just left my old intermediate wave there because I didn't want to be a little too exuberant, as far as the look on the chart. So basically any back test by the dip until there is a resolution, aka a conversation about a total ceasefire in the Middle East, because I think this just keeps building, because the flight safety is really not coming from America, it's everybody else. And it's probably a big chunk of India too. Because India does tend to do that during wars within their region. So looking at Exxon, now oil is not cooperating as much as I would like it to be right here, but realize with the U.S. putting those missile defense systems up, all we need is for Saudi Arabia to shoot down one missile that's near their territory or heading into their territory or heading next to their territory, and oil is going to pop. So I'm looking at Exxon very much like an oil hedge, as well as Oxy and any of the other oil plays that we have in the books. Now we'll cover crypto in a second. Looking at IWM, maybe we get a bounce at this 161 and then back test up to maybe 168. Now, with how aggressive the slope here is, and notice we have our first slope, then our second slope, and now this is our third slope. It does not have to back test to 168, just giving you a heads up there. I would not be surprised if it continues to flush. We're ultimately looking for a target of just below a $1.50, about 147, I believe it is. So that really has not changed. Now, Qualcomm, of course, this becomes a little complicated because we're just in play. It's just at the point where we want to entry. We've gotten our breakdown trigger, and now we've given a back test to the 8-day, and it's rejecting the 8-day. So it is a perfect spot to enter, with the exception of earnings. So target one is going to be right around $100. So I would stay shallow. I would look at December 100 puts if you have not entered. Now, the suggestion is and actually there was nothing in earnings, I think, that related to Qualcomm to give us a hedge. I'm just looking back there again a second. A Western Digital, but that's really not specific enough. It's sort of like an ARC. AMD definitely, but I think AMD beats. I don't think AMD has the same premise as Qualcomm. However, if they beat, my point here on Qualcomm is I target 110 calls if you're going to hedge. Just the only thing you're trying to do is insulate in case it has a good earnings. So maybe 25% of what you put on the puts, or wait until after earnings. And I don't know, earnings probably is going to be the catalyst that brings us much lower, is my thinking. So just keep that in mind. All right, CBRE. Now earnings are done here, so we're good. So, our next entry short is at $68. So, right now I would take partials if you have any November still, the 60 at 62.40. Now, anytime we're working charts on a shorter time frame, when it's necessary, I'll put up a daily chart, only because we can't see it on the weekly. So this was pretty clear on the weekly. So this one I posted a weekly on. So, and then buyback puts around 68, because that's a big difference in your gain, and then you're just reloading it. And ultimately, our target is going to be down at that 51. So from that 68 to 51, if you haven't tried puts, this is a very good setup to try puts. Okay, because the risk reward here is like the likelihood with the events ahead of us of this not going down to that $52, I would say is less than 5%, at least in my opinion. Right or wrong? Okay, let's look at Airbnb. Now, once we broke trend support, we've just been bleeding. So target one is about 105. I would take partials there and wait for the back test up to about 114 and reload there. Similar look to CBRE as far as the breakdown. Now, we have earnings. So Airbnb likes to pop on earnings. Now, I would suspect they guide lower. So we might very well get a pop and then a drop. So I'm going to leave it up to you. If you don't have a position on it, or if you do have a position on, 120 calls are probably your hedge. And what you're really doing is, the same with Qualcomm, is we're sort of doing a straddle to try and insulate a little bit, just through earnings, because I really don't want to take off my puts, because it could really be a catalyst with Qualcomm or Airbnb. And to be honest with you, with this kind of chart, I don't really want to miss that. So then once we get that back test, now realize I expect this to start accelerating like CBRE. Because, we have our first slope, second slope. Now this is, it's increasing the degree of the slope. So, I would suspect that we could get down here pretty quick. I don't know this week, but I would say in the next 2 or 3 weeks anyways, I would think. All right, let's look at the SPY. Now I did a little bit different with our chart. After looking at some of Kirk's thoughts as we went through it on Saturday, right now, I'm seeing 404. Trend support for me, the daily, March 2023, the off number, 385.36, is a beautiful spot with the look of the Bollinger Bands with the fibs and how it looks like it will squeeze. And then I'm looking at the history of what does it do when it squeezes before it goes the other direction. So, and we are turning down on the upper band, and we are turning down on the lower band. The only thing with that is it might squeeze more than I'm thinking, and we could end up down in this support zone. So there is possibility of that. It does have that look. So as far as the SPY puts, I know some of you have, maybe even some 420s, maybe some 400s, maybe even some 390s, etc. Depending on what you're holding, I would take partials or cover around 404 and then run a 20% trailing stop based on your gain. That's what I would do. Let it run. Okay. You've gotten your piece out of it. Great. Wait for the back test. Whatever we get up around the 434, I will probably start scaling around the 382, 429, adding that back, heading down for another target down to 404. Now that's another $30 in the move. Nice move. So I want to make sure we catch that. Now, looking at the NASDAQ, we have broken this wedgie thing. I always look at these. Is it a descending wedge? No, really not, because it's not a flat. I always look at this and I'm like, what's the difference? Well, trend support broke. That's the difference at the moment. So I would suspect that we back test that maybe on our 4, but we got to get down to that 326. So if you are short NASDAQ, which I have not called for yet, however, which is not really a bad spot to put something down to 326, still about $20 from where we are. $10 is a nice move on the NASDAQ. Then, once we get our 346 in, that's the time to add some put. If you want to hold the NASDAQ and sell some covered calls, I didn't put that on there. Part of the reason is I didn't like the depth of it. I just didn't like it for some reason on the NASDAQ. And that probably has to do with how it has been euphoric in the past when it flips directions off of bottoms. So, this has been a bottom. This has been a bottom. This could be a bottom right here. Boom, we're back up to the top of the band. And a lot of misses. And I've had a lot of misses to get where I'm at. So I'm very comfortable because I scale in. So I put a little piece on, and then I add a little more when it's working. I add a little more when it's working. And then when we get to my critical point where like for example, we break below the 200-day, boom, it back tests that, whatever our back test is, I'm full on board at that point. So there's specific things that happen that I've learned over time that mitigate your risk. Hopefully that made some sense. All right. So looking at crypto, one thing I noticed is that Solana did very well, has been doing very well. XRP did very well. Now, BNB, we can't really, or at least I won't trade that because it's, anytime there's an SEC kind of, and there's another federal investigation on them as well. But I like this heat map and just, I get it with Quantify Crypto, and actually it's free. Somebody turned me on to that. And I like the heat box because when I go for my weekly allocation, I like to look at this and say, okay, when I'm going to scale, what am I going to scale? And, I like looking at the top 6 boxes, and, like, for example, this week's allocation was ADA, Solana, XRP, and BTC. I've got a few Doge I put on a couple weeks back, but it's where, I just take that in quickly to say, okay, I'm going to do 75% of my allocation to BTC. I'm going to do another 10% of my allocation to Solana. I'm going to do another 10% allocation in ADA, right? And then I'm going to split up the difference and do a little more XRP, but I didn't do Doge only because I felt Solana and ADA were a little more aggressive. So we went there. All right. So looking at Bitcoin, nice flag. Okay. However, nice flagpole, nice flag. Boom. Okay. I can't go back to the other one and do it again, but that's basically what happened. So we're going to go here and we're going to go boom, back down to 28,782. So I've pointed it out, a January 2021 resistance around 42.52 after that. So we come down here, put their 2 in here, then we're heading up here. So we got some decent upside, except for we got a decent move here. Realize that's about $6,000, pretty much our entire move up. It's going to give it back. So it's a round trip, at least the way the count says at this point. Okay, looking at GBTC. Now, we're going to get a little choppy right here, build out a flag, it looks like. But I think the flag holds. One thing I noticed in our last rundown, when Bitcoin started to flatten out a little bit, GBT is considered to continue to grow. So also one note is the Gessler, the head of the SEC, made a comment last week. They had close to a dozen Bitcoin spot ETFs that they were reviewing. And I thought that was unusual, is why he would come out and say that and not be critical. First time I've not heard him be critical of the risk of Bitcoin ETFs. So I wonder if that means they actually are going to approve all of these, a slew. So I think if they come in and give us a slew of approvals, I think we got a decent pop still off of GBTC and Bitcoin from that. And on top of that, we also have MicroStrategies and everybody else who's buying like a lunatic right here. So, I think we hold up. However, we still need to get past that little box on Bitcoin. But ultimately, I think our target on GBTC for our primary wave 3 is around $34. Looking at Ethereum, now it's a small flag, but it's still a little flag, still below the breakout line, still in this resistance band, 1830 to 1701. And, I don't know. I wish it was acting more aggressively. I wish it was doing more like what Solana's doing, or even XRP, because, XRP's moved from 43 to 55 off of the lows. And now I wanted a piece on, and I don't really have a piece on except for what I added this weekend. So it's what it is. And that's pretty much what we have besides XRP, again, we're up about 55. My first count says about 73. And then we should head towards our 3, I think, around about 40 at some point. So, my case for continuing to add to XRP, it's not a confirmed weekly allocation for me yet. I'm just putting pieces on depending on how good my week was. So I can spread it out a little more kind of thing. So, but that's what we have for today, folks. Great trading. Until next time.